Hi, this is Sive Morten with the daily update on EUR/FX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look at the forex markets as usual. So here's we again taking a look at the euro currency, and this week our fundamental research will be dedicated to the numbers that we've got on this week: statistics on gross domestic product, Michigan sentiment, PMI index, inflation data. So a lot of statistics we've got, and we have to find out what actually the real conditions of the United States economy stands right now, because it has the crucial meaning for medium-term perspective, approximately for 3-6 months. Just not bother you with the long-term talks and explanation. You could read the report if you are interested with that. Just by using the common sense of recent data that we've got, by taking a look at the reaction of the markets on recent data, we come to the conclusion that the major fundamental economical trends are breaking right now. So if just a few months ago was the major tendency on the lower United States dollar, a lot of stimulus, treating economy as depression stage and long-term accommodative policy from the Fed, situation is changing right now, and data shows that inflation and pressure is growing, economical activity is growing, and we expect that this will lead to the big shifts in summer. So we think that upside potential in the euro currency is limited, maybe if everything will be good to the euro, and shifts will not come sooner than we suggest. Maybe euro will be able to hit the targets that we have specified. It's around 128-130, but this is only in a positive scenario. Potentially it could happen that market will flirting around 125, and then as factors will become more evident, we could see the major turning point on the euro currency to the downside. This is in the case if United States will be 2 steps forward compared to euro currency in terms of the inflation, interest rate policy, and economy improvement. And we think that this will be the case, just because the United States stands in forward on the vaccination. It stands in leading group with the United Kingdom and Israel, as you know. No problems with the vaccine stance in the United States compared to the euro currency, where we last report said that it would be delay in the delivery from the AstraZeneca vaccines. The United States was not in the lockdowns, so maybe some local lockdowns somewhere will be, but it was no government lockdowns compared to the euro currency. And in the current conditions, the United States probably will be out of the depression faster than the euro currency, and that makes us think that somewhere closer to at the end of the spring, I suppose, somewhere close to the May and April, we should see the first visible signs that situation is changing. So if you would like to know the details, how we come to conclusion, what numbers we're watching, just read the report. Speaking on the technical part, well, you can see here is not too much changes we have. On Friday, you could see this market formed another grabber, although actually the whole couple of weeks market stands in a really tight range. So since 120 area we treat as the significant support, we expected some bounce up from here could happen. So this is also weakened 120.63. We think that theoretical market could show another swing down before the major reaction will start. So we will keep an eye on it. Because we have few grabbers that have not completed the target yet, so it suggests the taking out of these lows. Grabber should lead to the dropping. And that theoretically should lead market to somewhere to the 120. So then maybe upward bounce could happen. At least we have the reasons to suggest this. We have some patterns that we will keep an eye on. So on the daily chart, this is the grabbers. On the lower time frame, 4-hour time frame chart, we still have the same butterfly. It makes overall scenario relatively obvious and easy to control. Here I just have reshaped a bit because we have new swings here, and I reshaped the butterfly, but the target actually stays the same. So butterfly, if everything will go perfect, it will become great finalizing pattern because it leads price right to the 120, and it's complete OP target of this ABCD pattern. So completion of the pattern right at the OP and agreement and daily confluence. It will be nice background for to consider taking the long position with upward bounce here. So that's what we intend to keep an eye on. Conversely, the failure step of this pattern is also obvious. Market has to climb above 122, raising all the grabbers and raising the butterfly. In this case, we could say that yes, probably the upward action will start earlier, not from the 120.63 area. So that's what we have on the daily. So on the follow time frame chart. So in the beginning of the week, we will control the price behavior with this butterfly, trying to identify early signs of whether the market is going with this scenario or it is ready to erase this scenario. Particularly speaking, how we intend to do this. On the hourly chart, let's take a look that we have clear ABCD pattern up, completing the OP standing near the 21.4618 level. So here we see some signs of the rejection of price, so the market hits the OP and pull back right back down. Here inside you also could see the free drive. If you calculate the extension, you'll see that it's nicely forming the free drive pattern, and also you could recall the Gartner's triplets of sell that we draw previously in this chart. It also stands valid. So based on the overall background, if we would suggest that market is forming the butterfly and is preparing to downside reversal, this retracement and the shape of this retracement is quite enough to complete the pullback, and it's really suitable, really a comfortable point to set the top of the right wing of the butterfly. In the normal conditions, if market really bearish, this type of action, forming the top in this place, forming the pattern that we have, it's usually leads to reversal. So this should be enough to any bearish market to form the right wing of the butterfly. That's why here market has to turn down if everything stands good with our scenario. If conversely market will break it up and start tending to the 122, then don't take short position. It means that overall background is changing, and do not forget about the double bottom that we specified and discussed on Friday in video. So for the double bottom, it needs the opposite type of action. Market needs straightforward upper action back to the neck. It's necessary conditions. And if you will see it, it means that probably market is turning to the double bottom rather than to forming the butterfly. This will be, I show you the triggering points in the current step on the hourly chart. So just keep an eye on these two levels and the type of the price action, you will understand what's going on. So whether market's forming butterfly or butterfly probably will be destroyed and market will form the double bottom or something of that sort. So that's what we intend to do currently on euro currency.